What is up, guys? It's Chris from Coin and Capital, back again with another video. Now look, Canada has been struggling, man, for the last 10 years, right? People are blaming liberals, people are blaming the right, but what if I told you neither of them are to blame? And in fact, this is all built into the system, and it is a necessary function of the system. So stick around, because in this video, we're going to talk about the stagnation in Canada's GDP, why GDP per capita, why Canada's citizens are in fact getting poorer each year, and finally, we'll break apart the mechanisms and the structure to show you guys why the last 10 years in Canada are only the beginning, where this is going, and then finally what we can do as Canadian citizens to avoid it. So stick around. Let's get right into it. Okay, guys, so when I was doing some research for this video, I stumbled across this chart, and boy, oh boy, is it a good chart. Because when we talk about Canada, the conversation, it used to be one of abundance, prosperity, right? But over the last 10 years, it's transitioned into quite the sad story, right? Minimal growth. Some numbers just dropped, I believe a week or two ago, and it's projected that Canada's GDP growth will go like 1.1, 1.4, and then 1.6 over the next 3 years, right? So marginal growth at best, right? This has been one of the major factors of that narrative deteriorating, right? It's also been one of the major factors on why there's no more middle class in Canada and why 100,000 it just getting by. So when we look at this chart, it shows some very interesting things. The blue line is the 10-year compound annual growth rate of Canadian productivity, right? The gray line is labor force growth, right, from ages 15 plus. And then the red line is real productivity. Okay. This is insane, right? So it looks relatively normal for the majority of the time span we have here. And I just want to point out the .com bubble, right? That was when Canada saw some of the most meaningful real boost in productivity, okay? Which makes sense, right? When these tech booms happen, at least happened in the past, came with it productivity boost, right? Because tech makes our lives easier, more efficient, more streamlined. Okay, but we'll come back to that in a second. We also saw an uptick in the labor force participation, right? Pretty normal. However, things started to get a little weird after COVID. Okay, what happened in COVID is the whole system broke, and we printed the most money we've ever printed before. Okay, and that's when things really started to break down, because we saw the labor force growth skyrocket, right, with only a marginal uptick in compound annual growth rate for productivity. But then we saw real productivity just plummet, right? So real productivity sitting at 0.1. Productivity CAGR sitting at 10, and then labor force growth 1.5. So the disconnect is quite crazy, because a few things happened, right? So we printed a bunch of money, and then also AI came into play on the scene, right? So now, before I said when these tech revolutions happen, usually it comes with productivity boost, right? In the form of people can work more efficiently, right? However, with AI, there's a catch, right? Yes, people can work more efficiently with AI, but the whole purpose of that is to replace humans, right? So humans become less productive because AI is taking their jobs. Make sense, right? So that is one factor. We saw the actual productivity plummet, right? Another factor, right? Low skill immigration into the workforce. Yes. Another factor is the currency has been diluted into oblivion, right? We need to understand that is a factor as well. And that currency dilution plays such a major part in this chart that we're looking at here. Canada's per capita GDP has lagged everybody, okay? Especially 2021 to 2024, okay? And now usually, okay, when you print a bunch of money, it's a very good bookkeeping gimmick to skew numbers like GDP and whatnot to the upside to make it look really good. Okay, so keep that in mind, right? But we have Australia not doing so hot 2021 to 2024. The US, obviously, very good, right? Despite them not producing anything really, right? That's the power of money printing there. The UK, so, don't really care about the UK. Canada has performed one of the worst, right? In that 2020 to 2024 timeframe. The Euro area, not so bad. And then Japan as well, not so bad. And I think this is due to a few factors, right? So in Canada, when we printed a bunch of money, it didn't really go anywhere useful, anywhere productive, right? When all the stimulus came out, what we saw was one of the biggest misallocations of capital. So in Canada, it went to welfare, to very unproductive humans. In Canada, it also went into housing and construction contracts, right? But the thing is with that, right, when we drive all of this money into housing and construction, when in reality housing is being treated like an inflation hedge, right? Marginal supply growth from all these contracts and whatnot will not outpace inflation, right? So the more money printing that happens, the more housing is used as that inflation hedge, the more prices respond, right? The harder it is for supply to catch up. The result, right, from all of this misallocation of capital, instead of investing into productive things, right, that loss from that misallocation got pushed down to the consumer, and in fact, everybody got poorer, right? So no matter what these politicians are saying, stock market does this, stock market is looking good, right? This program is going to save us, right? Build all the houses, right? Bring house prices down. Guys, it doesn't matter. This is why when people run around like a chicken with their head cut off, around elections, like, oh, he said this, Mark Carney's going to save us here. Oh, Trudeau did that, Poilievre did that. Like, guys, it doesn't matter. And why doesn't it matter, right? Because this is a function of our monetary system, right? And no politician has come out, right, to say we need to fix our monetary system, right? We need to go back to hard money. We need to stop the money printing. Nobody said that, right? It's all spend, right? Push it into the most unproductive BS you can think of, right? Where the most bureaucracy lays, and then just push the loss down to the consumer through inflation and debasement of the currency, right? That's it, okay? And to prove that, right? I want to show you guys a couple charts here, okay? So take a guess at what this chart is, right? It's not a crypto coin, okay? It's also not an emerging market currency. This is the Toronto Stock Exchange, right? So everybody in Canada, this is your savings account, right? Your retirement fund. Our economy. This is our economy, priced in Bitcoin. Okay, keep in mind, Bitcoin's been around since, what is it, 2009? So 16 years. And over those 16 years, the TSX priced in Bitcoin has lost like all of its value. Like, look at it, guys. It's done nothing but go down. Okay, so what does this tell us? All right, we look at it more closely, give you a better view of it all, right? Down, down, down it goes. What is this telling us? It's all smoke and mirrors, okay? Because when we price the TSX in dollars, right, it's at all-time highs. It's at all-time highs, right? But then when we price the TSX in the world's most finite asset, commodity, whatever you want to call it, Bitcoin, it's at near all-time lows. Okay, so what does this mean? It means the system that is propped up on money printing, right, is a facade, right? And the money printing has to continue to keep that facade alive, right? Because what's in the TSX? It's our retirement accounts. It's our savings accounts. It's collateral in the banking system. It's tax receipts for the government, right? So when that stops going up, right, when the money printers turn off, riots in the streets, right? So what do? They keep the money flowing. They push the cost down to the consumer through inflation and debasement, right? The consumer is then hit with stagnant GDP per capita growth, right? Stagnant productivity, right? Because guys, if we use the TSX priced in dollars as a measurement of productivity, of how productive the Canadian economy is, it would be, right? It looks good. All-time highs, right? Can't complain. Okay, when we price it in Bitcoin, in truth, right? Bitcoin is the most free market, right? This is the most truthful market. So when we price TSX in Bitcoin, it shows us the truth. And the truth is, guys, nothing has been happening. Okay? We've been treading water at best. At best. Right? And a lot of people aren't feeling the best. Okay? A lot of people I know in Canada are having a very hard time. So the next time a politician says this program will save us, this budget for that, we're going to cut spending here, guys, it's all smoke and mirrors, because they have to do the same thing. All of them have no choice but to spend, and all of them have no choice but to push inflation down to the consumer. Finally, TSX priced in Bitcoin overlaid with the Bitcoin chart. Okay, what we can see here is that the times the TSX does the best, okay, is when there is restrictive monetary policy, high rates, when there's no excess liquidity in the system, right? When the money printers are turned off, right, because they printed too much last year. That's the only time the TSX sees any real gain. Okay, even then, it's been on a downtrend, an insane downtrend for the last 16 years. Right? So what can we learn from all of this? Guys, if we want, which I'm sure you all do, to avoid stagnant GDP per capita, right? If we want to get richer in real terms, right? Not buying fake, fugazi, TSX BS, right? Not going through BS pension funds, buying GICs and government bonds. If we actually want to get richer, to maneuver through and come out the other side of this lengthy recession in Canada, it's very simple what we need to do. Trade our dollars for something finite. Trade our dollars for Bitcoin. Right? Take your paycheck and invest some of it into Bitcoin. So take out a mortgage and invest into Bitcoin. Maybe. That's a discussion for another day. However, the way out is through finite assets. Okay, Bitcoin, gold, 2 options. Pick one and keep buying, please. Okay, over the long run, you're going to thank yourself. This is how we maneuver and get out of recessions, guys. This is how we take back purchasing power and get richer in real time. If you guys enjoyed the video, drop a like, comment below, subscribe for more videos. Catch you guys in the next one.